Prior to the 30 June valuation cycle, I think the market was really disconnected in terms of pricing, particularly from vendors and what purchasers were prepared to pay. Now that these valuations have come through, which is more in line with current market values, we're seeing a heightened level of bidding activity with buyers know that they're playing for keeps and the vendors more or less prepared to meet the market and look at what realistic value looks like for their properties. We've seen the buyer profile in Melbourne change pretty significantly over the past 12 months. Typically, it was the private families who dominated the Melbourne CBD fringe and metro suburbs. We're now starting to see a lot of syndicators and funds who now are seeing the right sort of investment returns for these properties without as much competition from these private families, which is actually getting their foot in the door for some of these opportunities. Groups out of Melbourne, Sydney, Queensland, Adelaide. We're seeing a lot of these groups earmarked Melbourne as an investment destination of interest, and I think that'll continue. Yeah, we're seeing more off-market activity purely because vendors, they're not committed to a full sale process at this time, but they would like to see who's out there and what money people are prepared to pay for their assets. In our experiences though, on-market campaigns typically yield the best result. Buyers typically engage more strongly in an on-market process because they know the vendor's financially committed to an outcome. And we see that time and time again, and that's demonstrated in the quality of bids that are received.